I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, stock market volatility exploded this week as investors' attitudes went from euphoria to panic. Monday brought splits in Apple and Tesla, and that did lift the market as these stocks soared again. Investors like the idea of being able to buy these stocks cheaper. Of course, they're not cheaper, they're just split prices. And then they turned sellers again later in the day as the market fell off on news that Fed Claridia came out and said that they were ready to start looking at the balance sheet again and have those discussions. Tuesday, Apple continued to move up. Tesla began to waver a little bit, but the market posted strong gains on news that Zoom zoomed 131 points on the upside. It was a huge gain, 20-something% on their really good earnings. Wednesday was the day of the big blow-off as investors finally took the hook. The market really went up all day and speculation was just rampant. The NASDAQ was weak early in the day. Apple, Tesla, Zoom, they were moving to the downside. And overall, the breadth figures were horrible that day. But the investors, they just wanted to buy the stuff. They turned the NASDAQ around that ended up on the day as semiconductors and the financial stocks were the new ones in the rotation. Investors grabbing up those stocks, which they saw as value. The Dow for the day on Wednesday up 450 points, and they pushed the S&P 500 up to astronomical levels, 3588. Just was incredible as significant new highs were made on Wednesday, and euphoria was rampant. Thursday was a different day. There were huge selling waves that came in on Thursday. The indexes fell 4% on the day at worst. It was worse, actually, for the NASDAQ. The stay-at-home stocks, the work-at-home stocks, the techs, they crashed. Tesla finished the day and actually down extreme losses. And for the week, from peak to low for Tesla, it gave up about 22%. Apple down about 16% from peak to low. And Zoom down an incredible 25% from peak to low. So a huge amount of selling came in on Thursday. The tip-off was the very weak breadth that we were seeing in the markets. For the day on Thursday, the S&P 500 was down 125 points. That was after recovering some near the close. The NASDAQ down 650 points. That also recovered before the close, as did the Dow, which still ended down 800 points. It was a day like we had not seen in a long time. In fact, the worst day since June of this year, as the selling just came in like crazy. If you don't think that this compares to the 2000.com, I mean, you have to really look at those valuations. Zoom, which had incredible earnings, still trading up around 200 or 250 forward PE. The prices that we got up to were just mind-blowing in this bizarro world that we live in of the Fed-created liquidity. And now we're seeing the sellers start to take the price out of these really, really crazy stocks. Friday, there was a surprise in the unemployment number. There were 135 million jobs created, which was very much in line, but the unemployment rate, which was expected to be 9.8%, dropped off to 8.4%. So pretty good improvement in the unemployment number. The participation rate was partially in line for that. And I don't exactly know what have brought that big of a decline, because overall things are really not good out there at all. And of course, a lot of hope for a coronavirus vaccine coming sometime before the election, but that is, in my opinion, an absurdity, because coronaviruses have never had a vaccine. So maybe they find some way to deal with the symptoms of it, and that hopefully would be the real answer for that. So indexes on Friday, they went into another round of panic selling. We saw the S&P 500 fall more than 100 points again. NASDAQ absolutely killed as we saw panic selling come in again in Apple. Apple at one point was down nearly 8 points on the day. Now at midday, as we're doing this show, it is now only down about $1, so it's made a huge comeback for Apple. I'm going to show you some things on these tech stocks in a few minutes that I think you're going to find interesting as we talk about what's going to happen in the market going forward. For Friday also, the bond market moving down. It had been in a recovery mode as the stocks in the NASDAQ started to fall off, and this breadth numbers were bad. And we also saw bids coming in the dollar. These are safety bids, of course. And now the bond's down 2 points on the day here on Friday, as the stock market has stabilized, and the hope for an uninflationary environment just doesn't make any sense. With the Fed printing this kind of money, we think the bond market is in for a lot more on the downside. So bonds sharply off for the day as the stock market has recovered. And they were weak all day here on Friday. So while the stock market upside move has been beyond excessive, and corrections are likely to be steep, odds are that this one will be brief. This one actually, we expected it to be down 8 or 9% off of its highs, or worse. We backed off on that and expected it would be more like 6%, and then we said, well, maybe more like 4%, and now the correction from peak to valley so far has been about 6.6%. So we actually think that, our analysis all along has shown that there would be a break into early September. Never ever did we ever think it was possible that the market would rally as long and as high as it did. So believe me, we don't get any credit for a good call. This was not a good call. But the stock market is falling very much into the cyclical period that we expected it to. So while that stock market does, have a good amount of risk, we think, still now and for the very, very near term, I'll show you that in short-term view, we think that after, the next week or so, it's going to try the upside again. While the indexes could test the all-time highs again, we expect that between now and election time, there are going to be a lot of huge swings. I think traders will like it from here all the way through the end of the year. But investors, well, not so much. I think they've seen the best of it, at least for now. For the day, for the week, the stocks for the day and the week, it's been pretty wild. The Dow is probably faring the best of it, as there's been some movement into some of these more, we'll call them the stable stocks that have been more in the value category. That's what at least investors think. The Dow did best, down about 2.5% or so in the week. S&P and the Russell down about 3.5% in the week. It's moving around a lot right now. NASDAQ down about 5% on the week. It was a lot worse than that. And the Vix has had a huge week. We actually had been looking for a move up to 30 or 35 in the Vix during this period. It gets up to about 38 this week from trading about 23 in the previous week. So the implied volatilities really explode. Remember, the Vix is a measure of fear. They call it a fear index, right? What it really is that a measure of demand for puts as investors, traders reach for insurance. And that's why the VIX moves up the way that it did, and it had a very, very big jump this week. Bonds, 30 years for the week, down close to 2 points right now. The 10-year yields, they move down. The bonds now up about 1 point, not 2 points. And the 10-year yields, they move down by about 3 basis points. So a improvement in the bond market that we don't really think is going to continue. Gold market had a rough week of it, but now is coming back a little bit, down about maybe $37 on the week. Silver down about $1. And the dollar up about 0.7% on the week as that safety bid came in. And oil moves down about $2.50. This is a breakdown, and I will show you what that breakdown looks like as we move into the short-term view coming up in just a few minutes. I'm going to show you something a little bit different right now as I want to talk a little bit more about these market leaders, the short-term stocks. Before I do that, I want to make sure that you know that you should go to askSlim.com, explore the website, make sure that if you're watching this on YouTube that you subscribe to the channel there. Click that notification bell if you want to get notified when we put up videos. We do that pretty often. And make sure that you like this video. Give it a thumbs up if you like it. And go to Twitter and follow us at askSlim. We put up a lot of charts and a lot of research there on Twitter. If you want membership info, and I'm going to tell you about a special that we're having right now, then you write to Matt at askSlim.com. All right, so let's take a little look here as we look at the technology leaders. And I want to give you a sense for our short-term cycle analysis in 6 of these stocks, and why it points to the fact that there probably is not a lot more time in this downside wave for these stocks to fall, and maybe the market, as they are, of course, an influence on the market. Let's take a look here at Facebook. So the first thing we're going to show you is that we're looking at cycle analysis. These are harmonic families, as we call it. This is like music, the harmonics that you see right in here. There's a dominant and a minor that you see very clearly. And each of these dominants are made up of 2 minor cycles. In this chart, there are some that are made up of 3 or 4, depending on the individual chart. This is an art form, actually, cycle analysis, and this is all done manually. So there's a lot of study and research that comes into doing this type of analysis. I want you to note the minor fluctuations that you can see and how that shows up right over here in the chart, right over here. And now we are in this first minor cycle right there. This first minor cycle has a positive configuration. What that means is that, well, the low is higher than the low right over here. You can see this one and this one. These are all positive configurations, and this is the positive momentum on the slim ribbon. That tells you the likelihood that the stock is going to continue on the upside as you see that kind of momentum. Here's an example where you had a upside move, and then you had another one right over here, and it just barely took out this high and then came down and had its correction. This one took out the high pretty significantly and then pulled down over here. And then you can see that this is kind of lining up to, we're going to call it about 3 to 6 days in this declining phase that it's in. And you can see it's gotten down to just under the support but bounced right back up over there. So this says, Facebook, that it doesn't really have a lot more downside. Probably going to come down and then give you a bounce on here, and then there's a lot of risk over here coming into the end of September, beginning of October. Again, like I said, a lot of potential volatility coming up during this period as we move towards the election. So Facebook looks like it's got, we'll call it 3 to 6 days before this downside movement is over with, and then it tries to get back to the upside. Let's look at some of the other tech FANG stocks, and you'll get just a feeling about the consistency. We call this cycle synchronicity. Here is Apple, and Apple, you can see it has a little longer cycles than what we're looking at in Facebook, And this one gets down to the buy zone. Momentum still positive, as you can see right over here. And now this looks to us like it has about 2 to 4 more days in here. So Apple in this very, very depressed downside movement over here, down nearly 8 on the day to about 111, rebounds all the way back up to 119, as you could see. But it looks like it's going to test 111 again before this is over with, and then get a rally towards this resistance area over here. Again, if you look at this right over here, I can just look at this timing, and it says probably rally, but then pull back again into the middle of October. A little bit different timing than I showed you in Facebook. Let's look at Amazon, AMZN. And you can see in here a similar thing. Timing in here, well, got a little bit lower than we had estimated, but not bad. And now it looks like another 2 to 4 days on the downside. So this is all pointing to, declining into next week and then getting another rally in there. Again, we have these positively configured cycles. They all look really strong in there. And this one didn't get down to the cycle support yet, though it's getting close, you could see. And usually when you get under the 78.6%, which is this line right over here, that is a warning that the next rally is not going to get you back to the high. So while the normal projection would be back to the high, we're going to be putting in resistances in here that we believe it will fail, and then again move down again into the beginning of October. You can begin to see the idea of the synchronicity of these patterns, declining for maybe another 2 to 4 days, rallying up again, and then coming down into October. That's a look at Amazon. We'll just stay in these techs, FANG stocks. We'll look at Microsoft right here. Microsoft has multiple cycles in there that you can see. They're a bit out of phase. And Microsoft looks like that low is basically in right now. Maybe it has another couple of days, come down and test these lows, and then move up. This actually got very close to this also, below the 78.6, which I didn't put in here. And that means that the next rally is likely not to get as high and then come down again. This points to beginning of October. So it looks like rallies into October and then coming down again, and likely going to give you a lot of trade when we look at that in Microsoft. We're going to be putting some sell zones in here for when we get a bounce. Google, again, we're going to be looking at synchronicity. This has multiple time frames. Again, the dominant cycle and the minor cycle. We are just ending this dominant cycle here. We're going to call it 2 to 4 days and then moving up again. So you can see the clarity in here when you look at these stocks. They are beautifully aligned. And again, we're going to look for a short-term low in the coming week, and then getting a rebound, and then coming again down into, well, this is end of September, maybe beginning of October in the Google market. And one more we'll look at, this absolutely monster Tesla, which got the valuations that are just beyond belief. That's the wrong stock, TSLA. I wonder. And you can see in here, well, Tesla's got a little different patterns. We don't see a clear minor cycle in there. And you see this move down pretty significantly into the bottom of this support right around 364. As it had this very, very big decline in here. And then we're going to look for some rally into this area. Again, momentum still positive in there. And so somewhere in here is a sell, and it's likely to come down again below this level over here into what date? Well, into the end of September, beginning of October. So that's what we have. We have these 6 stocks that look like just fantastic synchronicity when we look at them. And this is the Tesla. I wanted to show you the weekly so you get a little feeling on our weekly analysis. Also, as it gets down towards these support areas, and this says some rallies and then coming down into December, which might be the picture of what we see in the whole market in there. See the engulfing pattern in here, the huge rejection from the fib extension zone right up over there, the 78.6 it tags, and then comes right down. You can get an idea of the kind of volatility we're expecting as it probably trades up into this white space back and forth. So a good look at what weekly cycle analysis looks like in Tesla. And that's the picture as we looked at these markets. The tech leaders on the short term, a lot of synchronicity that we see in there, and a very, very strong likelihood that a short-term bottom is going to be made in the next week, a rebound, and then potentially more trouble ahead late September, beginning of October. So I think that it's important to look at that cycle analysis. I'll say a little bit more about cycle analysis, of course, as we move forward. So wanted to share that with you. Don't go away. I'm going to bring you the short-term view, but you have to see right now what we have going on. This is absolutely mind-blowing. This is our special Level 3 trial. Slimulator ranking system, trade ideas, and so much more. The Slimulator ranking system is our algorithmic system that really shows you momentum analysis, directional bias with a 3 to 6 week outlook, and the 84 best traded symbols. That's the best traded stocks, ETFs, indexes, and the futures. We look at 24 different futures contracts. This is for the people that are short-term position traders, swing traders, option traders, really in the sweet spot of what option traders look at. It's incredible. And we have new scanner in there, so you'll be able to see the changes in each of the momentums and our individual rankings. You have to look at this to really get a sense for the quality of what goes in here. Our special Level 3 trial, our lead on this is Arvi, our lead analyst and new vice president that we have here in the company, and he does an amazing job with the Slimulator ranking system and trade ideas. Let's take a look at what the trade ideas are. This is just great. We take all of our cycle work, all of the sum of the evidence analysis that we do in our huge universe of widely held stocks, ETFs, and futures. And we put together trade ideas, about 1 or 2 a day, and you get to see great type of analysis because Avi does a video on each of these trading ideas, not only for your information about why we've come up with these scenarios on these individual trades, but also for your learning. So you can do it and you can apply it to your own analysis, of course, because we're an educational firm and all we want to do is make you the best trader that you can be. Your success is our success. So we have a video for each of those trade ideas. We're going to give you the favorable entry ranges, target zones, and reevaluations levels when these things don't work. Yeah, there are times that they don't work, but how often do they don't work? Well, I'm going to show you that in a moment. How often is it that they don't work? And also, you can get our it's new real-time notifications as a price nears these important levels. All you have to do is click the bell on our Level 3 Trade Ideas page, and you will receive live notifications right on your computer when it gets there. So how are trading ideas? How do we do? Take a look at this evaluation to trading ideas. We're looking at a total number of trade ideas that are released of 227 of the measurable outcomes. There's a few that we took out because they were basically scratches. They hit the zones, they didn't go anywhere, they didn't lose any money, so we removed those so we can get some pure idea of statistics. Trade ideas that hit the entry zone that we give you were 174 of them out of the 227. Of those 174, 66% were positive. What makes them positive? Well, they get to within 1% of the favorable entry. Most of them get into the favorable entry, and they move to within 1% of our target. And most of them get into the target zone. So an amazing number of 66% have that kind of accuracy. The ones that are wrong, the negative ones, about 34%, hit the reevaluation levels, and then they're removed, and we let you know about that. So it's like we're just, sharing the analysis with you and saying, well, this has changed, and we no longer see this as favorable as we did. Look at that. 2-to-1 favorable. This is an outstanding record and really, really helps you, all of this information, with really understanding how to improve your entries and how to improve your win-loss ratios. Also, we have another statistic in here that really is important, the directional bias. Now, what that means is that we tell you whether it's a long or a short. Now, sometimes it does not hit the favorable entry, so we don't really, get credit for that we made the trade. But we wanted to give you the calculation. 74% of all of these were the correct directional bias. How do we know that they're the correct directional bias? Well, once we announce the trade idea, it then moves and hits the level, our target level, before the reevaluation level is reached. 74%, that's 3/4 of everything that we give you has the right directional decision on it. That is unbelievable. 26% missed. In other words, we thought it was going to go up, but it didn't. It went down or reversed. We thought it would go down and it went up. But these are incredible numbers, and imagine how they can really help you. So wanted to share that evaluation with you on Trade Ideas. Remember, that's level 3 and 4 members. Also with that, you get our amazing stock index report live stream. This is daily. Matt is the lead on this, and he puts this out every single morning before the opening. This is a very customized look at 3 different indexes, the S&P 500, the NASDAQ, and the Russell, which included are a key support, resistance level, breakdown areas, and the amazing acceleration zones. This is on 9-3. Of course, the market had a huge decline, but it went the yellow zones are the acceleration zones, and you can see this line right over here. You see is the reversal scout, and you see it reversed right over here and turned down. It keeps you in the correct direction. It accelerates through these zones right over here, and it really shows you. I didn't want to jump off of that yet, but we'll be right back there. And it really shows you these the amazing way to hold on to trades for a very, very long period of time. This is just fantastic information, and you get this in our level 2, but it's included in this level 3 special. What else is included in this level 3 special? All the level 1 and 2 content. Our stock index report live stream that you just showed you, our stock index report daily with incredible amount of information. Boy, that we really nailed it on the stuff that we put out on August 26th for traders, talking about the ranges that we expected. We also do a weekly analysis. You get the weekly stock index report, really in depth with a ton of info in there. The weekly Spider ETF review and the key Spider ETFs. You also get our Slimulator Momentum Tracker. This right now is a level 1 product. We're upgrading it. It won't be there forever, but you can see over 1,000 symbols with all of our momentum algorithms in there, and really get a sense for the condition of stocks. You want to know what stocks are getting killed right now and how that changes it? It's all automated. This all gives you a great idea whether we're just in a correction in those stocks and the longer term patterns are strong, or something has changed, and you want to see that based on momentum conditions. And there's more. You get our entire library, 500 plus videos, 9 categories that I have created over these last 5 years. Tools for techs, more than 80 videos on learning how to do charting and things like that. You can look at at our stock sectors, which now RV's doing a fantastic job on different stocks. Trader psychology, which I have done a ton of videos in there about personal things that may be getting in your way of success. There are 6 other categories. It is incredible, and you get all of that. Can you imagine what I just showed you? All of this, the trade ideas that you have right there, and Slimulator ranking system, this amazing results, all of this that you receive every day for short-term traders on these short-term charts, and all of that. Take the special trial, 1 month, $49.50. That's all it is. You can binge watch. You can really get a good sense for everything we do. You'll get our Wednesday Future Speak video. There are 3-month specials available also. If you write Matt at askSlim.com, he will send you the special links to get this level 3. I'm telling you, you won't believe the depth of the content that you get. Special trial, $49.50. How can you not do this? And again, 3-month specials. Write to MATT at askSlim.com. That's Matt at askSlim.com. All right, so what do we do now? We're going to look now at the short-term view of 5 major markets. Really appreciate those of you that stayed with me to listen to that promo. It's important because you become that subscriber. We can keep bringing all of this amazing information to you that we bring every single week. Now, let's take a look at the short-term view. We always take an accounting of how we did the previous week. We're going to call it kind of average this last week, as we're going to get about 60%. We missed the gold market. The gold market didn't really get in the kind of directional wave that we thought, because it rallied but not as far, dipped not as far, rallied not as far, and now is getting weaker than we thought right now. So we only get a tiny little credit on that. The bond market we had a total miss on for the short term so far, and we did really pretty well when you look at light crude, the dollar, and also at the stock market, which we get full credit on, is that it really moved sharply into the time frame that we thought that it would. We did miss the level of the that it would move up to on Wednesday, but we really make up for that by the depth of the decline that occurred into this September period that we've been talking about. So now let's take a look as we look at these individual charts. We're going to move off this Tesla chart, which is still there, into light crude /CL. And this is the light crude pattern in here on the daily chart. So we had talked about this area 43.5, 44 for a long time as the resistance area. Last week we talked about this cycle low right there at 41.46, and if it broke down it would be negative. That is the case, and now we've had a loss of momentum. You can see upside momentum. Well, where did that begin? We're going to look at the slim ribbon here so you can get a sense as we look at all of these cycles right in there. The slim ribbon, which is the most amazing indicator that you can have for momentum, turned positive right over here. We were at about $30 in the light crude market. We use the projection oscillator with the slim ribbon, and all of these buys that you see right over there, all extremely valuable. These are buys or adds or confirmations to the upside momentum, and from $30 it gets all the way up to 43.5. Just beautiful action there on the momentum signal. Remember, that's what you're going to get from us in various time frames in the Slimulator rankings and also in the Slimulator momentum tracker. So here is the breakdown of momentum right there. So that's the first time in all of these long weeks. And the breakdown of the cycle analysis and the time frame here is into around the second to third week of September. So in other words, this decline that's going on right over here is likely to continue. So what we're going to look for is a continued choppy period in here and working its way down. Our downside projections are at around 39.15, right up around this level right over here on that support, and then getting into the weekly supports over here, which come down around $38. So we're going to look for continued attempts to rally that fail and downward movement here in light crude. Some of the evidence, upside momentum, is gone. Short-term, intermediate-term momentum's now really in the neutral category. A downside correction likely based on the weeklies and the dailies that we're looking at into late September, late October, beginning of October looks like a much better period. So if it gets into that support zone we're showing you, that is very likely going to be a buy area for the light crude market. Let's take a look at gold. Now, there's reason for caution in here. And here's the reason for caution, because you can see the lows right in here, and that green support range that you see there is very important, and we got down very close to it right now. I don't really want to see that break, but it's looking to me like it's going to. And so this is your cycle right in here that you can see, and then the rally came as expected right up over here, but now it's begun to move down. Momentum just can't get anywhere. We've talked for now the last month that momentum was kind of laying on itself right there. That's the slim ribbon, and giving you no positive momentum. You can see here the projection oscillator is showing you the end of the positive momentum that drove this up for hundreds of dollars, and now struggling in this resistance area, struggled here, struggled over here, and all of that looks to us like this key area right in here. If it breaks, that's a problem, and we're kind of guessing that it's going to. Momentum, we'll just call it sloppy and neutral. We said last week we thought that the silver correction, and here's the silver cycle coming right down here, could weigh on these markets, and that is what's happening. And silver is probably riskier than gold right now, as of course it's more volatile. And if we get under these levels around 1910 on the downside, then it's pretty likely we're going to be testing these lows that we talked about in the last couple weeks. This is down around 1875, this is down around 1830, and that would be, if you break down here, these then would be pointing downward, down to around this period in the third week of September. So the silver and the gold markets would be pretty close to the area that we would expect the declines to come down into and then end. Again, 1910 is a risky area. It's not good if it breaks there and then the patterns will really weaken. We're going to call for some chop in here and then the likelihood of breaking down because it got so close to here and hitting down in those numbers. We're still looking for late September and into early October to be a much more favorable period for the gold market. So that's the sum of the evidence that a weakening going on and looking for these patterns to move down into these periods over here into the second, third week of September, and then October being a much better period out over there. Now we're going to look at the dollar, which got a bid in here. The dollar gets a bid and a flight to safety, but it really cannot hold it. You can see the pattern in here. Again, we're always looking at momentum. What are you getting? What's the information you get off of looking at momentum? When momentum is negative, and I'll just go right over here, then the probabilities of the rallies failing are very high. You catch the impulses with momentum on the downside. When you got to negative momentum right over here, you had these warnings setting up right in here of sells. Every time it rallied, it gets into the slim ribbon. There's the 13-day right over there that it then moves down again. It did it again right over here, and we're looking for the dollar to fade off again at this point. Overall, we're going to call the move a down move and then an up move again. Choppy, range-bound action in the dollar. We thought it could get down to 91.45 right over here. It gets down to 91.75. So didn't quite get as low, but you could still see the weakness in there. We're going to look for a decline and then a rally. Attempted rallies going absolutely nowhere. Momentum negative in all time frames. Some of the evidence, intermediate patterns say it's got another week on the downside. The daily patterns say it's got another week on the downside. And then a window for getting more to the top of the range will open up after that. So the 3-week outlook basically is down for a week and then maybe up for a week to two over there in the dollar. The next thing we're going to look at is the bond market. Now the bond market, flight to safety bid came in. You can see the beautiful cycle harmonics in here, as there are minor thirds within the dominant cycles. Pretty clear when you look at that. So we're just going to open this up a little bit more. You can see it tried to get up over here past the resistance, couldn't do it, moved down pretty sharply. The action in here looks like the next 2 weeks bring you a decline, and then a rally, and then further downside in here. That's the way these patterns are setting up. We have a little bit of a quandary because this low you see was early right over there. This low was late. So we're not 100% sure that which of these lows is the key low. We are pretty sure that no matter what, the effect of the downward turn in the intermediate patterns is going to let these patterns resolve itself on the downside pretty significantly. That is the sum of the evidence that all momentum is to the downside. We're looking for a downside move into October. You see this date right there. That cycle ends on October 20th. The weekly pattern looks the same. It looks the same in the 20-year also. And it just says rallies are going to fail. And you can see what's going on right there. Momentum negative in here. And overall, it's not a great pattern. So that is a look at the bond market. We're going to take a look at the stock market in a second. First thing that I want to do is I want to remind you, some of you are watching this right now, just looking at the clip of the S&P 500. I want you to go back and look at Market Week, and you'll be able to see the special that we're running as I give you real detail about this for Level 3, Slimulator Ranking System, Trade Ideas. I show you all of the numbers on how well they've done if you go back and look at that. Stock Index Report live stream, Stock Index Report daily, the weekly Stock Index Report, amazing analysis for longer term holders, weekly ETF review, the Slimulator Momentum Tracker with just a huge amount of symbols that you can look at with all of our algorithms in there for momentum in 3 different time frames. Really the sum of the evidence in there that gives you our directional bias in each of those stocks, and my whole library, 500 plus videos, 9 categories, all of that just for $49.50. And there are 3-month specials. Right, Matt at askSlim.com, MATT at askSlim.com. Just brought that back right in here because a lot of you people jumped and you want to see the S&P 500 and the stock market, and I want to make sure that you see this amazing offer that we have right now. So now we're going to look at the stock market, but I'm going to show you something a little bit different first. We're going to go to SPY. This is something I share with my members. I might have shared it on here back some weeks ago, looking at cycle analysis. Remember again, the cycle analysis is looking at the rhythm in the market. It's the heartbeat. Ba-boom, ba-boom, ba-boom. Each of these cycles that you look at in here are different lengths. They all take different forms, but the rhythm and the oscillation you can see right over here. The average cycle is 22 weeks in length, going back for years and years. And you can see, well, this one was only 18, this one was 18, this one was 24. This one made a high on 24 and now is coming down in here and maybe 25 or 26. So this one's going to be pretty long. We looked for declines, for the cycle to come down and decline much earlier than this. But the point I made is that the longer it holds up, the sharper and steeper it's going to be. We expected that there would be a decline that occurred like in each of these, and you can see the percentages, 23%, 6.7%, 6%. This was, of course, 35%. If this one comes down in the spiders, down to this level, about 325, it will be a 9.2% decline. Peak to valley right now, it's about 6.6% in here, which is, pretty normal. And I talked about the amount of decline we can get in the S&P 500 during this period. And sure enough, here it is, it shows up. But it really was challenging when you have this type of extended move. And this certainly, I've had a lot of people say to me, well, cycles are no good. I mean, you have the Fed coming in and they've wiped out all the cyclic action. But not really. This looks pretty much exactly like they look when you go back for all of these years over here. I can just go right over here and show you looking back here into 2014, 2015. Look at the rhythms in here. They are absolutely perfect. You can see these upward configured cycles. They have these corrections. And there you see 12%, only 4.2%. Now I want you to look right over here because this is a pretty significant period. Rallied 19 weeks, came down in here, 12% decline. And then you had this kind of a go nowhere cycle for the next 4 months, 5 months. So there's a potential that we have something like this right now. And of course, there is a potential that you move up and take out the highs. Now, making the low in here in the next 1 or 2 weeks, and this is in alignment with what I showed earlier in the show about the tech stocks. Again, go back to watch the beginning of the show if you're only watching this clip. So the tech stocks show they're going to come down a little bit more and then get a rally. Question is, with the election coming and all the craziness that we're having here in our society, how much of a rally can you get in here, especially with Biden talking about these higher taxes? So we might just chop up into here and then begin to come down again, and then you get into this risky period again in November, December, early part of January, right over here. So I put this yellow oval in here. Well, that's where it belongs, as I have proven to you, here and here and here and here and here, going all the way back for the last 6 years, at least 7 years, and in this perfect alignment of 22-week averages. You want to learn more about this, go to askSlim.com, go to the workshops tab on the top, and I do a lot in there of explanation about cycle analysis, and you can see this decline really late, extended to 24 weeks for the first time in all of these years, and now has this sharp move down which really doesn't have much more time to go. So I really wanted to start my short-term view by giving you this view that's a little bit different in the longer-term, intermediate-term patterns. And again, you could see the giant megaphone that's forming in there. And there is a potential when you get to the top of the megaphone that a bear market is coming. So that's just a little tip-off of what we might be looking at in the future. And I'll be doing some big picture analysis on the stock market in coming weeks for our members. So that is a look at SPY. I'm going to switch over to SPX and move over into the daily chart. We've done a little bit of a change in here in our illustration. In Future Speak, I did some detail in explaining on what this looks like. Instead of creating just a single line that essentially we change based on the formation of the cycle as it occurs, we're going to do it a little bit differently now, and that is give you the upside potential if it's bullish, the more negative potential over here, which wouldn't be very negative in a bullish pattern, and what is the average right over there. And you'll see that this lays out pretty well. This wave structure was stable if under the assumption it was put in right at that point at the beginning of the cycle. This is multiple time frame bias that we look at, which is positive, and the cycle structure, which is positive. This big decline comes because of what I just showed you in SPY, because it's the very, very final stages. And you could see the projection in here after the next 3 to 6 days beginning to move to the upside again. That's what the short-term pattern looks like, but there is risk now. There is risk now over these next several days as the market has had these two very large down days in there, peak to valley, getting close to 7%, and then we're in this declining phase right over here. What are the numbers that we're looking at? Well, it broke through these supports that you could see that we had right over there. This support it actually stopped on was about 33.50. Best case is testing 33.50. I think last week we gave a number similar to that as the downward projection, but we actually did kind of blow the level of the highs right in here, which hit the very top of that fib extension target zone right up over there. We would have never guessed that it would have gotten that high. So for the next 2 weeks, we're going to look for a decline, which carries into the early to mid next week, potentially later than that, but I'm guessing by mid next week, and then beginning to make some upside rebounding ground in there is what we're looking at. This is the support from the weekly cycle around 32.75. There is a possibility of hitting that, and this will always be showing the cycle support right over there at 33.26. So that's kind of your supports that come in right over there, 32.75, 33.26, and where it tagged right over here about 33.50. We think 33.50 will go again on the downside early in the week and then begin to move up. We're going to say that some of the evidence is a correction that we've been talking about into September is here. Again, I'm not taking any real credit for that intermediate to longer term perspective because it went up for 2 to 3 months longer than I expected it to. We expect it to get down into this area of this 6.5-7% decline to the 9% decline right over here, and then be done for and begin to try to get some rebound. Investors right now are just bailing, absolutely bailing on this crazy valuations that we saw. Momentum is still up. You can see that. Even with this decline, the momentum is up in all time frames. It probably will go to neutral, and here is my guess, and then revive itself and then turn up again. If it goes negative, I'm going to be lowering my upside objectives in here before this cycle is done for. So we're going to look for this bottom coming around by midweek to late week next week, and then begin to get into a rebounding period. Again, supports on the downside or targets that we're looking at, the 33.50 area right over here, this cycle support here around 33.26, and this at around 32.75. I think that the 33.26 to 32.75 support zone right there is the strongest likelihood into the middle of next week. Wow, I showed you a tremendous amount today as we looked at the special trials that we have for you and our short-term view for the week of the S&P 500. So if, of course, you have any questions about anything that we showed you on the special level 3 trial, write to Matt at askSlim.com. He is going to give you a great overview of any questions that you have in there, because he's really the master at this. All right, so that's it. I want you to be so incredibly careful. It is so crazy out there, and I'm always wishing you great trading.